Hi, this is James Shrug with Westpac London's end of day report for Tuesday the 26th of February. Well, European equities have tumbled today as the Italian election uncertainty has sunk in with anti-austerity, anti-budget deficit reduction parties of Berlusconi and Beppe Grillo securing 55% of the popular vote and a blocking minority in the Senate or upper house. Effectively, Italy can't be governed, and it looks like the president will have to perhaps appoint an interim government ahead of fresh elections being held perhaps in May. I think they have to wait 3 months before they can hold another round of elections. And the interim government would have to perhaps change electoral law such that the impasse that was achieved by the current result won't be repeated. But that means more uncertainty, and it's emphasised the point that European electorates, when they get given the chance, they effectively vote out governments that give them austerity. We saw it in Greece last year, and we're seeing it in Italy now. And I think this has just reminded markets that there is the political will needed to enforce the austerity that's considered necessary to achieve the sort of budget deficit reduction that will keep markets comfortable financing these governments. That political will needs the support of the people, and the people have demonstrated yet again that they're not prepared to give that support. So there are problems ahead, it seems, not just for Italy but for Europe, and the markets are reflecting that with very steep losses today. I mean, the Italian market currently off 4.4%. The Spanish market's down almost 3% today. Germany off almost 2%. The French market's down 2.3%, and the London market off 1.3%. That's just ahead of the close. The Dow, however, it's up 0.4% at the moment. We've currently got Ben Bernanke testifying to Congress. He's just delivered his semi-annual monetary policy report. Some of his comments, well, he actually went over pretty familiar ground. He described economic growth as moderate, inflation as low, the job market both as gradually improving but also generally weak. Ran through the costs and benefits associated with quantitative easing, and he spent some time urging Congress and the White House to try to replace the sharp front-loaded spending cuts of the sequester, which comes in on the 1st of March, with a more gradual spending cut program that could actually enhance economic growth and enhance budget deficit reduction, he argued. US data today was universally upbeat. But we had two different house price measures. Both of them recorded their 11th consecutive monthly gain. That's consistent with the very low inventory of decent houses for sale that we've seen in other data recently. The new home sales rose 15.6% in January. They're now up 60% from their low point about 2 years ago, which sounds impressive, although that actually represents just a 15% recovery of the 2005 to 2011 peak to trough slump in new sales. So they look good in terms of the latest movements. There's an uptrend clearly in place in new home sales, because established dwellings are hard to find now, it seems. But there's still a long way to go before we see housing making a decent contribution to the US economic recovery. Consumer confidence on the Conference Board measure jumped more than 10 points today in February. That reverses more than half of the decline over the previous 3 months. So the post-election sort of fiscal cliff malaise that gripped consumers seems to have just largely dissolved in this latest report. The Richmond Fed Factory Index rose from -12 to 6. That's a decent turnaround, with shipments and jobs the main driver of that. And yeah, that's about it really. So two prices measures and sales of new homes, consumer confidence and Richmond Fed all looking pretty robust, and along with nothing really new from Ben Bernanke, that seems to have provided some support to the US market, and otherwise very poor performing day for equities. On the commodity front, oil prices down 0.5%, $92.66 a barrel. Copper's up 0.25%, and gold is up 1.4% today. It's at $1,608 an ounce. The Aussie dollar, it's been slipping on the equity market losses and uncertainty created by the Italian election result, and it also fell around the time of the US data coming out. So Aussie's down pretty much a whole cent since Sydney trading yesterday, when it was around 103. It's around 102 against the US dollar at the moment. We've got construction spending figures for the fourth quarter coming up Wednesday in Australia, and then CapEx figures and the important investment intentions survey for Australia on Thursday. So some events to watch for locally. All right, that's it for today. I'll be back again similar time tomorrow.